Hello everyone and welcome to today's Mondac webinar in association with Lawside Attorneys-at-law KLG, who will be discussing the innovations and opportunities from the blockchain landscape in Switzerland. My name is Dan Sampaio and I'm joined by a brilliant panel to take us through today's discussion. Hans Kuhn is a highly experienced financial market lawyer with a focus on banking and financial market infrastructure regulation, securities and secured transaction law and digital asset law. He is advising Swiss and foreign banks entering the crypto and digital asset space, as well as crypto exchanges and crypto startups. He worked on the blockchain legislation in Liechtenstein and Switzerland and serves on the board of blockchain firms, including crypto bank SCBA. Sebastian Bulti is a partner of Lawside. His practice focuses on Swiss and European financial market law, including fintech and blockchain law, civil law matters with a focus on corporate law, contract law and white-collar crime. He advises and litigates in the above areas and is a notary public in the canton of Zug. Sebastian is a board member of several technology startups and, due to his international clientele, is well connected with experts abroad. Now, before I hand over to the panel to begin today's webinar, a housekeeping item. You can submit questions to our panel by typing them into the questions pane of the toolbar on the right-hand side of your page. The panel will endeavour to answer as many questions as possible during our Q&A session, but please do reach out afterwards for any additional information you may require. It's now my pleasure to hand you over to Hans and Sebastian to begin. Thank you.
Thank you very much, Dan, for this kind introduction. Good afternoon or good morning, ladies and gentlemen, wherever you are. It's a pleasure to have you attend this webinar on Switzerland as a global blockchain hub and of challenges and opportunities in that respect. I think it is fair to say that there have been many conflicting messages and developments about crypto recently. On the negative side, we are still in the middle of the crypto winter with the Bitcoin price trending sideways now for about 18 months. The collapse of FTX and other CFA platforms wasn't helpful either, obviously. And the SEC and other US authorities are in the midst of a massive regulatory crackdown, which, at least from a European perspective, looks like an attempt to kill crypto. The European approach is more balanced, but the MiCA regulation, about which we will speak later on, is a massive piece of legislation and will be a game changer. On the bright side, it is undeniable that crypto is going mainstream more and more, with giants like BlackRock muscling in. Next slide, please. Digital assets and tokenization. Tokenization is the representation of financial or real-world assets by digital tokens, is quickly gaining ground. Perhaps most importantly, more and more financial market infrastructure are built on the basis of blockchains, as exemplified here by the good old London Stock Exchange that is in talk with regulators about using blockchain as a basis for the infrastructure. Switzerland has, since the early days of crypto and blockchain, been a global hub for this industry. Today, we're going to discuss how these events and developments are affecting Switzerland, and more concretely, whether Switzerland is still a good place for doing crypto and blockchain business. Next slide, please. We have arranged this webinar into three main parts. In the first part, we will discuss Switzerland's crypto and blockchain ecosystem. In the second part, we will go into a more detailed discussion of the legal framework and regulation, believing as lawyers that this is a major and important element of Switzerland's appeal. We will then discuss the impact of the markets in crypto assets regulation, MiCA, which I already mentioned, on this position. And after a few conclusions, we will open up for a Q&A session. I will hand over now to Sebastian. Next slide, please, who will discuss about Switzerland as a global blockchain hub. Sebastian, please.
Thank you, Hans. A warm welcome also from my side, and I would like to start with a few key points about the Crypto Valley Crypto Valley, or Zug, is a small village in the heart of Switzerland with a very long tradition in cryptography and also mechanical encryption devices. It first became popular in connection with blockchain and cryptocurrencies with the founding of the Ethereum Foundation in 2014 in Zug, and then international headlines and the name Crypto Valley followed in 2017 with the so-called ICO boom. There are also sub-centers within Switzerland and close to Switzerland abroad. In the French part in Geneva and Lausanne, Neuchâtel. Then we also have centers in the Italian part in Ticino and Milan in Italy, and of course also in Liechtenstein. We now have more than 1,100 DLT companies with 6,000 jobs who already been established in the Crypto Valley, and DLT stands for Distributed Ledger Technology. On the slide, you can also see some facts and figures about the top 50 companies in the Crypto Valley. We have 24 DLT companies with a total equity valuation of $9.7 billion. Then we have 26 DLT platforms with market capitalization of more than $175 billion. Out of these 50 companies, 9 are unicorns, which mean they have a valuation of more than 1 billion each. On the next slide, we will take a look into the diversity of the Swiss digital asset ecosystem. As you can see, it is very broad and diverse. We have advisory and wealth managers, we have venture capital, exchanges and marketplaces, investment products, which we will have a closer look at then on the next slide later. We have staking, tokenization, structuring, trading, fund services. We have B2B banks, digital asset service providers. We have 2 already fully established crypto banks with SEBA and Signum. We have a Swiss digital exchange, SDX, which has a license as an exchange, and CSD. Then we also have several advisors like ourselves in accounting, tax, legal, and also research and academia. But I think one of the most important points is that we have a strong political support from our government on the federal and also on the cantonal level. And you might heard already the slogan Crypto Nation Switzerland, which was introduced by our former economy minister, Schneider-Ammann. Next slide, please. As already mentioned, I would like to talk a bit about the crypto investment products. Here on this slide, you can see some of the 170 exchange traded products, so-called ETPs, with crypto underlyings, which are listed at SIX. SIX is the Swiss Stock Exchange, and there are a huge number of different products like tracker certificates, single currency index, future, warrants, whatever investors may desire. We also have actively managed certificates with crypto underlyings since 2021, or in 2021, FINMA also approved the first crypto fund, and the demand for the ETPs and also AMCs is mainly professional investors, but also retail investors with a limited understanding about the underlying technology. The reason why professional investors are not directly purchasing crypto and holding it in self-custody are usually regulatory restrictions and risk considerations. Because with these ETPs and also AMCs, investors bypass the technical challenges of purchasing and storing cryptocurrencies and the risk of trading on mainly unregulated exchanges. I would like to give the word back to Hans, who will tell you more about the legal framework and regulation. You're
Sorry,
mute, Hans.
Thank you for reminding me, and apologies. As already mentioned by Sebastian, one key feature of this ecosystem is a strong political support by the government, but also by the parliament. And another key feature is that both the governments and the Financial Market Supervisory Authority, FINMA, acted very proactively in their regulatory approach. They came up with regulation when most, if not all, other regulators were still looking in amazement during the ICO boom. The Swiss regulatory approach is based on two main pillars. It tries to fostering innovation by removing obstacles for the application of blockchain and for the use of crypto. That's one element, and the other element is safeguarding the integrity of the financial system, in particular by emphasizing the need for a highly efficient AML, anti-money laundering regulation. And obviously over time these two pillars are of different importance. From an industry perspective, it could be more innovation, and from an authority perspective, it could be more on the side of integrity. But I think all in all, this is quite balanced. The regulation is based on the, I think, globally accepted approach, same business, same risk, same rules. So it tries to be technologically neutral, which isn't easy always. And one important milestone in the regulatory development was the issuance of ICO guidelines in 2018 by FINMA. That was really in the middle of this ICO boom, and FINMA explained in these guidelines that first there is indeed regulation that might apply, and it explained in more detail how it understood the regulation to apply, something that is still missing in certain other jurisdictions. The guidelines were complemented in 2019 by stablecoin guidelines that explained if and how stablecoins might be regulated. One important and I think specific Swiss instrument for providing clarity are the so-called FINMA non-action letters. These are informal, written but informal letters responding to inquiries about the regulatory qualification of a certain concrete project. This request is normally accompanied by a legal opinion prepared by a qualified lawyer that explains how for this specific project the regulatory framework is understood, and FINMA then confirms or sometimes doesn't confirm that this understanding is correct. And there have been most likely hundreds of non-action letters being issued in the last four to 5 years. One of the problems is they are not public. As I said, there's a important focus on anti-money laundering, sanction, terrorist financing prevention. Many players in the crypto space that are not regulated have become members of self-regulatory organization. The Swiss AML system is a two-tiered system with self-regulatory organization overseeing non-financial intermediaries, and then the SROs being supervised by FINMA. And the SRO membership serves as a kind of an entry-level regulation, although it's only limited to AML KYC. And the last element is strong enforcement. There's really zero tolerance for illicit actors, and FINMA is famous or infamous for sending out long questionnaire if they suspect foul play. Next slide, please. one of the key features and the novel features of this of the FINMA guidelines was the holy trinity, the classification of tokens for regulatory purpose into payment tokens, asset tokens, and utility tokens. You may have heard about this trifurcation, which has been adopted more or less globally. I think this is really something you can find in more or less all regulatory approaches. Payment tokens are equivalent to cryptocurrencies. Asset tokens are representing some form of financial or non-financial assets, and some of the asset tokens are then securities tokens, qualify as securities, and then utility tokens give access to systems or platforms or services. FINMA has provided a very clear regulatory framework, and I think one important feature on the Swiss law that there is still no authorization required for the issuance of tokens. There may be an authorization required for the trading or the storing of tokens. That really depends. It's a relatively complex landscape. Next slide, please. And with that, I think I would hand over back to Sebastian to speak on the DLT Act.
Thank you, Hans. I would quickly like to show you or introduce you to the DLT Act, which is an umbrella act. So unlike other countries such as Liechtenstein, which adopted a new law, Switzerland chose to make amendments to 10 existing federal laws. This has been done in really, or the whole adoption process was done in lightning speed. In the end of 2018, the report Legal Foundation of DLT and Blockchain in Switzerland was published. Then around 3 or 4 months later, the preliminary draft submitted for consultation. Then by the end of 2019, the bill was submitted to Parliament, and the final vote took place in Parliament around 3 years ago in September 2020. And both chambers of our Parliament adopted the new law unanimously. So this was a really, really strong political commitment to the whole legislation. Next slide, please. The key elements of the DLT Act, there are 3 of them. First, the DLT Act introduced so-called digital securities or ledger-based securities or registered securities. We will refer to them in our further presentation as registered securities. Then it also has rules about segregation of crypto-based assets and data in insolvency. And it also introduced a new license for DLT trading platforms. To our knowledge, there are several applications pending or in the process, but no license has yet been granted for this DLT trading platform. However, there are secondary market trading options available in Switzerland with OTFs, which not all of them do have sufficient liquidity at this time. Next slide, please. Then I would like to take a closer look at the register securities. These are issued on a securities register, so the law there is also technology neutral, but currently only the technology of blockchain fulfills the requirements of this securities register. Then they are created based on a registration agreement between the issuer and first acquirer. The one holding the private keys has possession, so direct control over the register securities. They are transferred peer-to-peer, so in accordance with the rules of the underlying protocol. And the person registered in the securities register is deemed to be the creditor, which has an impact on discharge shareholder rights or good faith acquisition. Next slide, please. Then to segregation and asset protection. I mean, this is probably a key item since the collapse of FTX and other similar bankruptcies in the space. However, there's still a lack of clarity in most jurisdictions, which is not the case in Switzerland anymore with this new act. And crypto-based assets, these are registered securities and cryptocurrencies, are actually protected in an insolvency of a custodian if the requirements according to the law are met. And the requirements are that the crypto-based assets are held available at all times, and client account segregation or omnibus account segregation. And this means client account segregation or omnibus account segregation means that the assets can be allocated to the beneficiary at any time. However, this segregation must not be carried out on the chain. Then on the next slide, I would like to talk or say a few words about the recent supervisory practice. As you may have also observed, there was some onshoring activity going on of global exchanges and platforms. However, the Swiss regulator usually takes a consolidated supervision about such activities or for such global exchanges and asks for equivalent supervision in all other jurisdictions these platforms are active, and de facto makes it impossible for international platforms to onshore in Switzerland as long as they are active on so-called funny islands. Therefore, many of them target the Swiss market cross-border, which they can usually do due to the territorial principle of Swiss law, as long as they do not have staff or a permanent presence in Switzerland. Another example is FINMA's latest statements regarding staking, because FINMA announced that usually a banking license would be required for staking services in the future, which created quite some noise and uncertainty in the crypto scene, and we will see how this will go. Overall, we would say the glass is still half full. And with that, I would like to give the word back to Hans, who will talk a bit more about MiCA and the market access to Europe.
Thank you, Sebastian. I already briefly mentioned MiCA, which is really an important development and most likely a game changer. MiCA stands for Markets in Crypto Assets Regulation. That's a massive piece of regulation, really massive piece of regulation that entered into force in June of this year. It will become effective in mid-2024. That's true for the stablecoin regulation, and at the end of 2024, that's true for the utility token regulation and the regulation for crypto asset service providers. That's the acronym CASP is crypto asset service providers. The reason for this delayed effective date is that there is a level 2 and level 3 regulation that is outstanding, and that will have to be prepared by ESMA. MiCA creates, and that's really an achievement, a single market for public token offerings and listings and crypto asset services. across 30 jurisdictions, 27 EU member states and 3 member states of the European Economic Area. That's Liechtenstein, Iceland and Norway. So if you look at the map, this is most of Europe except Switzerland. And this raises the question how market access to Europe can be ensured in the future. Obviously not only an issue for Swiss service providers or Swiss issuers, but also for all other issues outside of Europe, but it's most pressing for Switzerland. And I think it is fair to say that MiCA severely restricts this market access. We'll go look at that into more in more detail in a minute. One point I'd like to make on the outset, which is important, that MiCA does not apply if existing financial market regulation, like for example MiFID, applies. So if a token qualifies as a transferable security or as a financial instrument, it's not MiCA that applies, even though it's a crypto-based asset, but it's still MiFID that continues to apply. Next slide, please. So MiCA has 2 main pillars. There are additional pillars like enforcement, like prevention of market abuse, but the main pillars are, on the one hand, detailed rules on the public offering and listing of tokens, and on the other hand, detailed rules for crypto asset service providers. Let me first look on the left side on the public offering and listing of tokens, where 3 kind of tokens are being distinguished, and that's one of the more mind-blowing elements of this regulation. Really, to get a grip on that isn't easy, but we have on the one hand 2 kind of stable coins, namely e-money tokens, and e-money tokens are basically single currency stable coins. These are tokens with that provide to have a stable value by referencing one single official currency. A token representing the euro, for example, or the Swiss franc, or the British pound, or the US dollar, USDC, whatever would be an example for an e-money token. Then we have asset reference tokens. These are also stable coins. That is a token that try to stabilize their value by referencing assets or currencies, and in that case, multi-assets or multi-currencies. And then we have a residual category. These are tokens other than asset reference tokens and e-money tokens. That's the official name of that category, and we refer to that only by other tokens. These are mostly and clearly utility tokens, whatever utility tokens are. This is one of the challenges to really get a grip on that category. It might also apply to certain form of assets token, provided they don't qualify as securities and financial instruments. The regulation for public offerings and listings imposes basically transparency obligations. The regulation for other tokens is modeled after the prospectus regulation. For stable coins, you have also MiFID type prudential regulations, and we'll come to that in a minute. Now, if you look at the right side, the regulation for crypto asset service providers, this is a regulation for 10 types of crypto asset services. Custody, for example, trading, exchanging fiat versus crypto or crypto versus crypto, order execution, placing of tokens, order transfer, advisory business. Importantly, that's also a MiFID type regulation, portfolio manage, and transfer services. So these types of crypto asset services are regulated on the MiCA, again with MiFID style prudential regulations, capital regulations, governance regulation, and then very specific regulations for the various types of services, like, for example, regulation on the custody or regulation on how to prevent conflict of interests in the placement of crypto assets. Next slide, please. Now, as already briefly mentioned, the regulation for the public offering and listing of tokens is the lightest for other tokens, for utility tokens and possibly asset tokens. What this regulation imposes is the need to file a crypto asset white paper and marketing materials with a national competent authority. That's an authority designated in any of the member states. So transparency and conduct rules. And if you do that, also as a third country issuer, you have full passporting rights in the EU. That's good. That's the good news. The regulation is much more restrictive when it comes to stablecoins. Here, the issuer must be authorized by the EU in order to offer stablecoins to the public in the EU, and in order to get the authorization, you need to have a registered office in the EU or be a financial institution authorized under EU law. So you can't get this authorization as a third country issuer. It's even more stricter for e-money tokens, for single currency stablecoins. Only CRR credit institutions, banks, or e-money institutions are permitted to issue single currency stablecoins. There's a category of significant stablecoins that's if the issuance volume reaches a certain level, then even further and even more stricter regulation apply. And this extremely strict regulation for stablecoins obviously was triggered by Libra, the now defunct cryptocurrency or stablecoin project put forward by Facebook, that really sent shockwaves through the ranks of regulators and central bankers globally, because with Libra they understood the potential power of a stablecoin issued by a massive social media platform. The regulation for crypto asset service providers, very briefly, also require an authorization, and this requires establishment in the EU, a registered office in the EU, or being a EU financial institution. And as I said, if these requirements are met, you have full passporting rights, including for marketing material, and that was one of the drawbacks of the prospectus regulation and MiFID that didn't cover marketing materials, which led many member states to imposing restrictions on or requirements for the approval of marketing materials that resulted in effectively in a restriction of market access. Next slide, please. Now, to summarize briefly, third country market access, it is relatively wide open for other tokens, for utility tokens. As I said, if you file a crypto asset white paper and marketing materials with the NCA, that's good enough, and then you have full passporting rights, also as a third country issuer. If you're issuing stable coins, be it asset reference tokens or e-money tokens, there is no way to get approval for third country issuers. Issuer must be established in the EU, or it must be a CRR credit institution or an e-money institution in the case of e-money tokens. And in the case of e-money tokens, and this is very interesting and important, if the e-money token is in the currency of a member state, then this stablecoin is deemed to be offered to the public in the union. And this legal fiction or presumption, whatever that is, means that it is, from the perspective of the European Union, prohibited to issue stable coins backed by the currency of a member state, even if that currency, that stable coin, isn't offered within the union. So the union, MiCA, tries here to prevent issuers in third jurisdictions to issue stable coins backed by currencies of the member state, like the euro, the Swedish krona, or possibly the Swiss franc, because the Swiss franc is also the currency of Liechtenstein, the official currency of Liechtenstein, and Liechtenstein is a member state on the MiCA. It is unclear whether reverse solicitation rules apply for this offering of stablecoins. In my opinion, this must be the case. Reverse solicitation means that if a stablecoin or a token is purchased on the own exclusive initiative of a person resident in the union, then these restrictions do not apply, but MiCA is unclear about that. Now, if you look at the right-hand side, the regulation for crypto asset service providers for CASPs, as I already mentioned, they may only be provided within the union by CASPs established in the union, having a registered office in the union, or by EU financial institutions. So third country service providers are not permitted to provide these services. There is no equivalence regime. The Commission has been tasked to provide an equivalence report by 2027, but if you look at the irrelevance, the complete irrelevance of the equivalence regime on the MiCA, there's no reason to have any hopes that this will result in any opening of the market access. Article 61 MiCA provides for reverse solicitation. As already mentioned, if services are provided on the own exclusive initiative of a person resident in the EU, that's fine. But Article 61 is extremely restrictive, more restrictive than Article 42 MiFID, that provides for a similar exception. It must really be completely passive. It is not permitted to target your activities to any member state. So it's a de facto marketing prohibition. It's extremely restrictive, and it seems relatively clear that you can't build a sustainable business on this exception alone. Next slide, please. So if you want to build a sustainable business out of Switzerland, there is one solution, and that's you have to build a substantial presence, open a registered office in the EU, and the way to do that from Switzerland is onshoring through Liechtenstein. Liechtenstein is part of the Swiss franc currency area. It's close to Zurich, about 1 hour away from Zurich. It is an EEA member state, as already mentioned, very crypto friendly. Liechtenstein has implemented the Blockchain Act in 2019 already, which provides equivalent regulation for token issues and CASP, and indeed served to a certain degree as a blueprint for MiCA. Most importantly, you have grandfathering rights on the MiCA if you have a Liechtenstein, a license under the Liechtenstein Blockchain Act. Grandfathering means that you can continue to provide your services, including in all other member states. So you have immediate passporting rights once MiCA enters into force for DEA, and Liechtenstein is working hard to get that done by the end of 2024. Next slide, please. So, ladies and gentlemen, I'm coming to the conclusions. Next slide. I think it's not overstated that these are tough times for crypto, but I'm personally completely convinced that crypto and blockchain are here to stay. It's simply too deeply ingrained in the population and in the financial system, at least short of a complete collapse of Bitcoin. But if that doesn't happen, I'm deeply convinced crypto and blockchain are here to stay. As mentioned, we are seeing a massive adoption by institutional and professional clients, in particular also in Switzerland, but way beyond that. And in order to see this adoption done, what is required is a well-developed and sound and diverse ecosystem, legal and regulatory clarity. Unclarity is absolutely poison to the adoption. That's what we are seeing in the US, and political stability and political backing. And I think Switzerland provides all of these elements, plus some more. We are also seeing an increasing number of crypto and blockchain-friendly jurisdictions, including the EU. I mean, MiCA, with all the reservations you might have, but MiCA is foremost a very strong statement in favor of crypto. We have headwind from the US and certain international standard setters like the Basel Committee on Banking Supervision. One of the key risks we are currently seeing are the lack of US dollar payment rails after the collapse of US crypto banks. But all in all, I think there's still a very positive outlook also for Switzerland as a global blockchain hub. With that, we have concluded our presentation, and we would be happy to take any questions you might have.
Brilliant. Thank you very much, Hans, and thank you, Sebastian, for both of your fantastic presentations. It was really interesting to hear you speaking on those topics, and I think that they're incredibly important topics. So we really appreciate your time and your efforts, and I'm sure that our audience appreciates that too. As Hans has said, we are moving to the Q&A section. If you do have a question, please do send it in. We have plenty of time for questions, and we do already have a number of those questions that have been sent in. And we're going to start with this question, which was sent in ahead of the webinar, and I think is really interesting. Are you aware of any trends or opportunities in blockchain in Latin America, specifically Argentina?
Yes, sure. And I think it's fair to say that South America, Central and South America are great places for crypto with a high level of adoption. And I think that's particularly true for Brazil, Argentina, Colombia, and Ecuador. Plus, of course, El Salvador. You probably recall that El Salvador adopted Bitcoin as its legal tender. I'm not entirely sure how relevant or serious that was, but I mean, it has been a strong statement that has get the international standard setters like the IMF quite excited. They didn't like that. No, but South America is an important area for crypto. They ranked in the top 20 global adoption jurisdictions. All of the jurisdictions I mentioned. I think the reason is relatively clear. With acquiring digital assets or cryptos, you're having assets that are beyond the control of your government, of your democratically elected government. It's beyond the control of your central bank that may be doing a more or less excellent job in keeping inflation at bay. It's also beyond capital controls, whether you like it or not, but that's certainly also a reason for this adoption in South America. So South America is important, as by the way I think Africa is.
Thank you, Hans. I'm sure that answered your question. The SEC seems to qualify all cryptocurrencies except Bitcoin as securities. How does this position affect Switzerland?
Well, not at all, not relevant. The definition of securities on the Swiss law is different from the how we test it. Basically requires a specific form, be it a physical security or a register security, and fungibility. And fungibility is assumed if a right is issued to more than 20 persons. And this legal definition doesn't include a reference to investment contracts or investment opportunities. So the SEC position is completely irrelevant. And by the way, FINMA has made that perfectly clear recently. They're looking at in amazement at the SEC position, but they really made it clear. No reason to get excited here.
But what I would like to add is that, I mean, if you're having a project or if you're having a token issued in Switzerland and then you would like to sell it cross-border to the US, of course, then it is relevant, the definition of the SEC.
Thank you, Sebastian, for reminding me. That's very, very important. That's of course, the US is a deaf zone in terms of cross-border distribution. You don't sell any of this stuff to US persons, as defined by the US, US law and US authorities. So that's perfectly true. But from a strict Swiss perspective, not relevant.
Excellent, brilliant. Hans, you mentioned in your conclusion that these are tough times for crypto, but we expect them to stay around. They're here to stay. I don't know if you'd be able to just elaborate or explore some of the reasons, perhaps over the last 6 or 12 months, why you think that it is sort of a particularly tough time for crypto.
Are you asking why it has been a tough time? Well, we are way below the price level we've seen at the end of 21, about 50%. Bitcoin has been hovering around $30,000 now for quite some time. It's, by the way, less volatile than certain currencies like the British pound at some time. So, but it's way below this level. I think that's one of the reasons, and the other perhaps deeper reason is that the adoption of blockchain as an infrastructure for financial products and financial services, and this needs to be distinguished from crypto. These are two different things, but this adoption is very slow. We are seeing many projects. I think virtually all major banks and many smaller banks are one way or another into these kind of projects. But what we haven't seen so far is really a massive adoption of real life cases, and we haven't seen the really convincing case. That's I keep saying that's about 10 years away, but I keep saying that since about 10 years now. So it's somehow time that we are making progress. But still, as I mentioned, really this massive adoption by institutional investors, including pension funds. I mean, this would have been unthinkable even 3 or 4 years ago that pension fund would invest in this. Today, it's almost you need to explain as a pension fund administrator why you don't have at least 0.5% or 1% of your assets in crypto. The mass adoption by banks, including major banks that a few years ago were saying doom and were negating all this. This is really a massive game changer, and that's why I believe difficult to envisage that this is going away.
Excellent, brilliant. Thank you for that. Now, in your presentation, you mentioned the USD payment rails as a main risk. Could you elaborate a little bit on that, please?
Sure. In March of this year, we've seen the failure of Silvergate and Signature Bank. That was they were among the casualties of the banking crisis in the US that was triggered by the collapse of Silicon Valley Bank. And Silvergate and Signature have been very important infrastructure providers and payment services provided to the global crypto industry. You must see and understand that the US dollar is by far the most important currency for crypto transactions. The euro has clearly less than 20%, perhaps not more than 10%. And all other currencies, including the Swiss francs, are simply irrelevant. In particular in Asia, there's no way around the dollar. And today it is really tough and difficult to get US dollar payments made. There is no major service provider. There are smaller service providers, but US banks are extremely reluctant, and this obviously is a result of the joint statement by the Fed, the FDIC, and the OCC in, I think, January of this year, when they said that crypto business is highly likely inconsistent with safe and sound banking practices. I mean, the quote was much more restricted, but the US banking industry read it that way. It's inconsistent with safe and sound banking practice. I think they are dead wrong. And our crypto banks prove it on a daily basis that they are dead wrong. But still, the result is that US banks don't provide this kind of services. There are a few alternatives, but really limited, slow, and extremely expensive. But this is something that the whole industry is struggling with.
Excellent. Thank you for that answer. The Basel Committee has submitted a proposal for capital requirements of crypto assets. What is the position of Switzerland in this respect, please?
Yeah, I think that's a good question. And the Basel Committee, of course, is the main standard setter for the banking industry, setting in particular liquidity and capital standards. And they have issued, I think, in December 22. A new standard on the prudential treatment of crypto assets, which will have to be implemented by member states by 25. The standard is extremely anti-crypto, really, to an extent that it's almost funny. They are slashing certain crypto holdings with a risk weight of 1,250%, and that means in practical terms, if you're holding $1 of cryptos on your balance sheet as a bank, you have to hold $1 of capital. Completely impossible. You can't do any kind of business with that kind of capital requirement, and there's no other asset. And believe me, there are a lot of other financial assets out there in real world, but there's not one other asset, with the exception of some really bad securitization positions, that have this kind of risk weight. The standard also imposes an infrastructure risk, and also the blockchain infrastructure has always been holding up nicely, very nicely. And they are imposing an exposure limit of 2%, so banks will not be permitted to hold more than 2%. The Swiss crypto industry believes that this standard is unreasonable, is based on an incorrect risk assessment, and is driven by US anti-crypto politics. And you must know that the Basel bodies yeah, the US is a peer among other peers, but with a certain heavyweight. And the Swiss crypto industry will oppose the implementation in the standards in Switzerland, but indeed the finance department is currently preparing the implementation in Switzerland. And Switzerland has a long tradition of fully implementing the Basel standards, even beyond the proper scope, which is limited to major banks. So this will be an interesting battle that we'll see most likely towards the end of this year. I hope that answers your question.
I think it does. Thank you very much, Hans. Looking at the time, I think we have time for one more question before we begin to wrap up, and I'm going to have to ask you to look into your crystal balls. What will the BTC price be at the end of 2024?
Okay, that's now a really interesting question. The problem is we are in the business of providing legal advice and not predicting the future, but I still try to do that, and I think I can say with certainty that it will be the higher, lower, or on the same level as today. And I won't charge for that advice.
And the sky is the limit.
Exactly.
Excellent, brilliant. Well, that concludes our Q&A. So thank you very much for those questions, and thank you to Hans and Sebastian for answering those questions. I'd like to once again thank Hans and Sebastian for their time today. It's been a fascinating session. What I would like to do is just to give you some time for any closing comments. And usually what I ask now is just if there are any key takeaways that you would like our audience to leave today's webinar with, if there was one bit of advice or information you'd like to impart. Hans and Sebastian, I'll hand over to you.
Okay, thank you very much. Yeah, thank you for hosting this webinar. I think the key takeaway is really times are changing, times are challenging, but the future looks bright, and I think Switzerland is still an excellent place to do this kind of business. So thank you very much for your attention, and have a good day.
Thank you very much.
Thank you very much. Just to let you know, there will be a recording made available to you after this session. We will be sending that to you. Hans and Sebastian will reach out with the slides as well. And if you do have any further questions, please do get in touch. But it's been a pleasure to spend an hour with you today, Sebastian and Hans. Hope you have a lovely rest of your day, and thank you to our audience for coming. Goodbye.
Goodbye.
Thanks.